What's going on, y'all? Sorry it's been a while since I made this video. I wanted to wait until the last week of August going into September just because what it's about. Well, the story today is Jerome Powell. If you don't know who he is, he's the Federal Reserve Chairman and he's in charge of interest rates. Well, for a while, Donald Trump has been talking to him and basically pleading with him to lower the interest rates for the economy. That way, there's more money coming in and less going out. Well, Jerome Powell has been denying that for a while. Well, it didn't take until Donald Trump came out and said, "I will fire you if you do not lower the interest rates." In hindsight, Trump can't do that. He can't fire him due to the laws. Well, now Trump is going after everybody else on that chairman board, like Lisa Cook. So last week, Jerome Powell said at James Hall meeting that there's a possibility with what's going on with inflation that he might drop the interest rates probably by the next meeting in September. I want to say it's the 15th, but check out this article real quick.
Welcome back in here to Live Now from Fox. I'm Andy Mack. On Friday in Jackson Hole, Wyoming, Fed Reserve Chair Jerome Powell said that obviously the conditions, quote, may warrant a change, a interest rate cut coming up in September. And coming from Powell, that is certainly strong language, and potentially a lot has changed.
I think was a signal that the rate cut is likely. A lot of economists took that to mean that a rate cut is certainly at least likely at the next meeting in September. They'll look at some other jobs data and some inflation data.
Now that we've watched that video from Fox News, you see why I decided to wait until now to really put out another video, just because interest rates are a possibility dropping in September. Now, if you wanted to read a little more on that, then you click the links down below. I have 2 articles that's talking about it, and you could do your own research. My name is Jalen Harper with Century 21 Judge Fight, located out here in the Dallas-Fort Worth area, and this series is for first-time home buyers. And what it's going to do is basically want it to be a guide and a go-to series for your journey of buying a home. Now, if this is your first time, the first video I talked about pre-market search. Second one I talked about meeting with a real estate agent. First one, I talked about the pre-market search and things you could do before meeting a real estate agent and a lender. The second one, I talk about meeting with a real estate agent. And the third one, I go over the different type of financing options that are out there. So that includes FHA, VA, conventional, and USDA. And then also at the end of the video, I go over various down payment programs you could use in helping you buy a home. But today I'm drinking a traditional whiskey cocktail, which is Jack and Coke. And to me, I think that's the most traditional one because that's the first one I actually really started on. But I chose it just because this is about the traditional process of being pre-approved. So let's go ahead and get started. I have a special guest for y'all. So see y'all when we see y'all. All right. So y'all, just like I said, we're going to be talking about the pre-approval process, and today I have no one but Michelle Creech here with Meridian Mortgage. So can you introduce yourself and let us know how long you've been in the business and what drove you to being here?
Okay. I'm Michelle Creech. I'm with Meridian Mortgage. I have been in the industry for about 25 years now. I started from being a processor, working my way up to a full loan origination. My incentive was to really help people get into their first home and make it an easy, stress-free process. And so throughout the years, I've been able to tweak that process and make it easier for the home buyers in the process.
So with you being in the business for a while, how does a pre-approval differ from a pre-qualification letter?
So pre-approval, it means we're getting all the documents, so pay stubs, bank statements, W-2s, all that good stuff from the buyer, and we submit it into the underwriter. So they do a full approval on it, and they're able to qualify them off the true documents that are given to us. A pre-qual is meaning everything's verbal. So we might have pulled a full credit report for them, but everything else is verbally told to us. So the big difference is that approval means we've seen everything, and so you're good, you're golden, you're ready to put in an offer with no issues moving forward.
Okay. And so how long is that pre-approval valid for once it's already issued out?
So 90 days. After 90 days, we just have to repull credit to make sure nothing's changed.
Okay, so say I got it in this month, August,
Mhm.
I can't still use that pre-approval letter in January.
Right, because we need to repull credit, make sure nothing else has changed.
All right. So, like you already said, what y'all look for as getting all the documents ready for the pre-approval letter. What are the main things that a lender evaluates during the pre-approval process?
So we're going to ask for pay stubs. We need to look to see if they're a salary employee, if they're hourly, how many hours they work, make sure it's that 40 hours a week. So that's the income that we use for them to qualify with. If there's less, like maybe they work 37 one week, 36 another one, and 40, then that's a variable income. So we have to look at that a whole different situation than as a regular 40 hour per week. So we're going to make sure that we're looking at all the documents, make sure there's no if there is child support, that we're including that into qualifying for their debt to income ratio.
Can you elaborate a little bit on the debt to income ratio?
Sure. So debt to income ratio is as much money that your debts that are on your credit report, and we want to make sure that toward your income, you need to have half of your income left over after you make your new mortgage payment plus any other debts.
Wow. Okay. So, since you've been doing this for over 20 plus years, what are some of the red flags that you see when pulling credit, debt to income, that for an average person like me, I wouldn't thought that would be a red flag?
So student loans are the one debt that a lot of people don't realize that we have to include into qualifying.
Yep.
So it depends on what loan program and what the status of the student loan is and how we compute what the actual monthly debt is that we include into qualifying. So for example, on an FHA loan, we have to do 0.5% of the actual loan balance as an estimated payment in order to qualify.
Okay. So I remember good friend Robert in Austin, his wife was just graduating college and she already had a signed salary of what she was going to make.
Mm-hmm.
And I remember you used that towards that without actually seeing how much she was going to owe or make.
Right. So usually what you're referring to is someone who just freshly graduated out of college and are now starting a job at the profession that they graduated in, right?
Mm-hmm.
So we're able to close on that loan with the offer letter and the first pay stub. So
Okay.
for example, this helps us a lot with teachers as they get a contract with the school district. We're able to use their salary in order to qualify and get them into a home right away.
Okay. And talking about interest rates, what influence factors into the interest rates a buyer will get, depending on their loans and everything?
Right, so we hear the question all the time, what are interest rates? And I'm going to come back with a handful of questions. So it all depends on the borrower themselves. So we got to find out first is credit score. That's one of the main things we look at it. So someone who has a 580 score compared to someone who has a 700 score, they're not going to have the same opportunity for the interest rate. So that's why credit's so important whenever you're looking into interest rates. So next is loan products. So conventional, FHA, VA, USDA, all those loan products have different pricing engines on them too as well. And then of course, loan to value, we say that is LTV, how much money they're putting down. That's a consideration into the interest rate as well. So there's several factors that go into it. So it's not as easy to say interest rates are this today. It depends on those factors.
Oh, okay. Well, since you just brought up what interest rates are today a little, would you say today is a good time to buy?
Every day is a good day to buy. The best investment ever is in real estate. There are so many ways that people can say, I'm gonna wait for house prices to go up. Well, if they go down in order for me to buy. Well, when they go down, that's gonna be more competition out there whenever you're putting in offers. So you're paying more for a house, whereas if you're able to get into the property, locked into that equity, you're already started gaining that, making that payment into that mortgage payment each and every month. And then when rates do go down, you have the opportunity to refinance. So that's whenever we tell people, you're not stuck with that interest rate for the next 30 years. You have the opportunity to always refinance when we get those refinance booms.
So what does refinance look like? Like, what is that?
So basically, you want to make sure you save at least 1% or more on the interest rate because you want to make sense. We got to do all the same work as before. We do have some other programs like a VA Streamline where we call them EARLs, or an FHA Streamline where they don't ask for a lot of documentation, sometimes not even an appraisal. So it gives you the opportunity to capture that lower interest rate to help lower your payment. And you don't have to start over on that full 30-year term where people are like, I just bought this house, I don't want to start all over again. You can refinance at the current months that you have involved already into the loan itself.
Okay. So what are some of the out-of-pocket costs that buyers should know about other than the down payment and closing costs?
So when I'm talking to my clients, there's 3 sets of costs when you're buying a house. You have your down payment, you have your closing costs, and you have what we call prepaid items. So prepaid items is like setting up your escrow account, so taxes, insurance, all that included into your payment. So we got to make sure that you have all that available and ready, or we can negotiate and see if the seller can pay them on your behalf.
Mm-hmm.
I'm always going to say, let's talk to your agent. They're the professional. Let's see what the best way to put this offer in. Before that, you have, your earnest money, which we credit you right back at closing. So it doesn't mean it goes away or the title company keeps it or the seller.
That's if you don't go into default.
That's if you do not go into default. But when we get to the closing table, and we're at the closing table. Closing table.
Yeah.
So we're at the closing table, then you get that credited back to you, and so does the option fee. So those are 2 things that get credited back to you. Now, home inspection, we don't require that you get one, but we highly recommend that you do. Okay, you want to make sure that you know what you're getting into.
Yeah.
This is a huge investment, the biggest investment you're ever going to make in your life. So you want to make sure you're starting off at the beginning with the right house. So the inspection, that's something that's paid up front, so it's not refunded back to you. And inspection nowadays, what do they run usually?
About 500.
About 500.
Something like that.
It's worth every penny of it. 100%.
Oh yes.
2, then you have your appraisal fee. So we're going to collect that appraisal fee up front because we have to pay that appraiser for his services.
Mm-hmm.
So that's one thing that's included in closing costs, but the only thing up front.
Okay. So when talking about the money, down payment, closing costs, and then rest of the fees, what are some of the common mistakes people make with their money or during the pre-approval process? Changing jobs, buying a new car, refrigerator, couch.
I had them all.
Yeah.
So you want to make sure everything at the beginning of that transaction stays the same. For that next 30 days or 60 days, however you're looking for a property and you're getting under contract, no job changes, no major purchases, don't close any accounts. Those type of things can affect and will affect your approval.
So I'm guessing y'all are like the FBI. Y'all going to find out.
We're going to find out. We're loan officers, and there's a reason we investigate. We get in there and we find out. And that's one thing that I'm really, I take pride in as a loan officer is I really look at everything up front. So when I give my pre-approval letter, it's true gold. We're going to close. So I'm going to walk you through all that stress-free process because you'd rather get everything up front than 2 weeks before closing run into some issues.
Yeah. One thing I will say about Michelle is most of my clients that I've closed with her, they've always been approved and funded before about 2 weeks out before closing. So that's one good thing with working with someone like Michelle, that she's already going to have your documents ready and prepared to close. All right. So we got a couple more questions. We have 3 more.
Okay.
Next one is about education. What are some of the myths that you wish people knew wasn't true about loans and getting approved?
So the major one that you hear across the board is you have to have 20% down to buy a house, and that's not the truth. We have a handful of programs that have as low as 3% down on conventional for first-time home buyers. FHA is 3.5%. If you're in a rural area, it's 100% financing.
Yeah.
And then VA, my most favorite loans to do, is 100% as well. We have down payment assistance programs that can help with that down payment or closing costs, whatever the client needs help with. So I think that's the biggest one, is that they don't realize that they don't have to have 20% to put down.
Yeah. So those down payment assistance programs, would you say it's helped a lot of people buy homes that didn't think that they could or afford it? Of
course. Oh yes. And there's so many opportunities for get 2% up to 5% of assistance. Yes, the interest rates slightly increase compared to the going rate, but they're giving you free money. So that's to be able to get into a home. So you're paying 100% to your landlord, you're paying yourself and building up your equity in your portfolio moving forward.
All right, thank you. So personal insight, what's the best piece of advice you could give your younger self when saying you're buying a house today?
I would say I bought a house, I was at the age of 23, and I wish I would have bought sooner. I just started to invest, so I have a couple of investment properties, and I wish I would have invested a lot sooner in my career.
Y'all hear that? Start investing early while you're younger.
Because the prices always increase, they don't go down.
Yeah. My generation's screwed. Sorry about that, y'all. So, with you being on here, what makes you different from other lenders, like banks, say, new builds financing? What makes you different as a lender?
So I pay attention to detail. I listen to what things they really want. I talk about the house payment because you know what? We're locked into this for the next 30 years. My name's on that loan too. So I want to make sure there's no issues moving forward. I'm going to stay in contact with you afterwards for all the questions that come up. There's so many things that you don't realize. What happens when you buy a house? All the junk mail you get. Is this junk mail? Do I pay this? Do I do that? And I'm just a phone call away or a text away to answer those questions.
One thing I could say is with the loan officer like Meridian Mortgage they're different from banks. They don't clock in and clock out. When do you get paid?
I'm 100% commission just like anyone else, so I don't get paid till the deal closes.
So that's enough reason for her to go the extra mile for you and wanting to close your deals. It's just because without you closing, she doesn't get paid and feed her family. So what's the best way for somebody to reach out to you if they wanted to inquire about getting pre-approved and pre-qualified?
Yeah, it's just a simple phone call or text. My phone number is 972-935-4204, or a quick access straight to my website. It's just michellekreech.com, Michelle with one L. It's an easy, quick way to get started on the process.
And what offices can they find you in?
I work a handful of offices, so I have locations in Mansfield, Grand Prairie, Arlington, Cedar Hill, Midlothian. So yeah, anywhere throughout the Metroplex, I'm here to help, and throughout the state of Texas. So I'm licensed, so I can close anywhere in the state of Texas.
So I know you closed my friend in Austin. You
That's
could
correct.
go around Texas.
I sure can, and other states as well.
I was about to ask that. Have you closed any deals in other states?
I have. I think 2 in Kansas City. So that's my most recent out-of-state people.
With them Chiefs fans?
With them Chiefs
Oh,
fans.
Lord.
I'm
Okay.
kind of a Chiefs fan, and that's okay.
Okay.
I've had transactions in Wisconsin, so throughout. So yeah.
All right.
Well, thank you for letting me be here. I appreciate the fellowship, all the great things that you give me. So thank you, sir.
You're welcome.
It's been a pleasure.
All right, y'all. That's it. That's it for this video. Stay tuned for the bloopers at the end. I did too.
I thought you did. I thought you had it.
I thought, damn, got it. So when talking about interest rates, what factor influences the interest rates as a buyer receives?
Are you recording?
Yeah.
Oh, then why did we talk at the beginning?
I don't know.
Sorry.
All right.
Blooper number 1.
So what's one myth you wish more people knew wasn't true about loans or getting approved?
I think that sometimes people don't realize that. What was the question again?
This thing is loud. Okay.
Ay, puppy.
You ready to say stay tuned for what are you saying?
Huh? What am I supposed to do? Do you even know what you're doing?
I don't. At this point, I don't. It's 4:23. I'm supposed to take a nap at 2.
No naps. You're a grown up. And
Grown,
you're not
grown
old.
people take naps.
When they're old. You're not old.
Do you not see gray hair? That's
Oh
old
my
by
God.
now.
Yeah.